Central banks aren't done. They're not done inflating. They're not done trying to fulfill their end game to be the lenders and buyers of the last resort. They're trying to keep the resemblance or the illusion is probably a better word of stability here in the markets, in the debt market, which is a time bomb. It's a ticking time bomb. It's ticking louder. It's ticking faster. It's going to go off.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for January 3rd through January 10th, 2023, while supplies last. This week we feature both of the only regularly minted 4/9 fine silver coins in the world. Silver Maples backdated and Silver Kangaroos from 2022 at just $4.19 over spot. Both the backdated Silver Maples and the 2022 Silver Kangaroos are renowned for their purity, recognizability, and design. They both come 25 to a tube, and Maples are 500 to a box, while the Kangaroos are one of the most affordable boxes around with just 250 coins. We have both coins in stock and ready to ship, and both at just $4.19 over spot. And finally, both are IRA eligible. If you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. Our number for all orders is 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always delighted to have this returning guest. Gregory Mannarino, the founder of TradersChoice.net, is wildly popular with our subscribers and viewers. He joins us again this Tuesday, January 3rd, 2023. Greg, thanks for coming back on Liberty and Finance.
Great to be here as always. Thank you, and I do appreciate it.
I've been following your work for many, many years. We met in person at the Liberty Mastermind Symposium in Las Vegas, where you're headquartered. And our viewers are always eager to hear, and they listen. You know, you've got a free video blog you put out twice a day, and in midday updates when it's necessary, and weekend report and that sort of thing. We'll talk about more about people, how they can sign up for that at the end. But you've been writing a lot recently about instability in the debt market, and I thought it was fascinating. My wife just read me a story yesterday about leaders in the FDIC speaking into the microphone at their major meetings, talking about let's inform major money managers about risks to the banking system, but let's not get carried away on that and inform the public, because you wouldn't want unintended consequences. They said we need to have the public having confidence in the banking system. So can you pull back the veil on that and tell us what's really going on in the debt market and what it implies about risk in the banking sector?
Yeah, what a big topic. Absolutely. Look, what I've been telling people for years is, this whole thing, it's all fake. It's all phony. It's all propped up. It's not on the elemental chart. This debt-based economic model that we have, it's not real. None of it is real. And the backbone of this whole thing is, central banks keeping all of this propped up by issuing debt through one door, buying it back through another door. It's a Ponzi scheme in every sense of the word, and without vastly inflating the debt, the global debt. This whole thing comes crashing down, and it's going to. We all know that. I think you and me, our followers, have been prepared for this for quite a while, but central banks aren't done. They're not done inflating. They're not done trying to fulfill their end game to be the lenders and buyers of the last resort. They're trying to keep the resemblance or the illusion is probably a better word of stability here in the markets, in the debt market, which is a time bomb. It's a ticking time bomb. It's ticking louder. It's ticking faster. It's going to go off. We witnessed over the last few months some pretty profound in our face instability here in the debt market, which we were all able to see with the gyrating bond yields globally. And then what happened? We watched the MMRI Course 300, Mannarino Market Risk Indicator, free to everybody. It's on my website, TradersChoice.net. And then all of a sudden action was taken by the central banks to buy more debt. MMRI came down. Some stability came back to the debt market. The stocks did gain after that. And now we're witnessing an interesting phenomenon. And I've been talking about this since the end of last year, watching this, the global bond yields rise. And then I kept saying, I don't think they're done. They're going to do something. Then all of a sudden, right here at the beginning of the year, what happened overnight was epic. We watched global bond yields drop, the 10-year yield drop. What does that mean? Some entities out here, central banks, are out here buying more debt, just like we knew they would. They're going to continue to do this. They're not going to stop until they've finished, at least fulfilled their plan here to create more people dependent on the current system or slaves to the system, as I have been saying here. That's the environment. They need to get more people dependent on it. So when they issue in their new system and allow by design this system to melt down, they say, hey, we have a solution for you. Yes, we do. And they're going to issue in their new system.
I just had a conversation with a client interested in obtaining physical precious metals today, asking, is this a safe time to put my nest egg into a 1-year certificate of deposit in a bank? Another one yesterday asking me the same question about multi-year certificates of deposit in the banking system. So they're trying, they use this exact wording, to just get out of the way until the dust settles. And it reminded me of when I was in high school, and all these newspaper headlines day after day after day about shelling in Beirut, Lebanon is what comes to mind. And I'm thinking about, that's like parking your Cadillac in the middle of Beirut in the late 70s and thinking you're going to wait for the dust to settle. That's the impression that came to me. Can you talk to us about the implications on an ordinary person of what you've been discussing, which is strains in the debt market, and what that implies as far as risks in the banking sector?
Well, look, like I said, this whole system is debt-based. We will get an implosion here in the debt market. It's going to implode. And what does that actually mean? It means a massive sell-off is coming, an uncontrolled spiking in bond yields around the world, and that's going to melt down. And I mean, I can't put this another way, destroy the global equity markets, period, the end. What people seem to be doing right now is hiding in cash. Okay, like this person you just suggested, investing in debt or something along those lines here. Got to be nuts, in my opinion. But I could understand the thinking here. A lot of people, there's a lot of bears here with regard to the market, and the psychology of the market tells us the more bears that there are, the more bullish we should become. But look, until we get some real stability, and we can't. It's impossible in the debt market, which is not real. It's all just propped up, and it's continued to be that way. I don't know. I can understand why people would want to get out of the way, quote unquote, while this thing kind of normalizes here. And, to me, watching the action of central banks, what they're doing is desperate, obviously. But at the same time, they realize the current system is imploding. It's imploding before our eyes. We have a global economy which is contracting at its fastest pace ever. People struggling to get by. This phenomenon of rising inflation, and central banks saying, oh, we got to raise rates because it's going to help the situation. Hasn't done a damn thing. It's never even meant to do it. They're going to continue to do so and then tell the lie that eventually one day a miracle is going to occur and inflation is going to come down. No talk whatsoever about contracting the money supply. But look, I can understand the situation is dire and the world economy is dire. What are people going to do? I still say the best thing to do, and I can't imagine another way around it, is to be betting against the debt, becoming your own central bank, holding hard assets, physical silver, my favorite asset of all time. You know that. Gold, probably my second, platinum, palladium as well. I love them all. I own them all. That's it. I think that's the perspective. We have to look a little further down the road, understanding where this is going to go. Eventually, this is going to get very real for people, unfortunately. And it's much bigger than just a financial meltdown. Again, this goes on to a resource problem, which they're going to create, allow to manifest itself, shortages of food, shortages of water, resources, all this stuff I've been talking about for many, many years. It's going to happen. It's starting to already here. And the lies, the distractions, the propaganda, the look here's, the don't look there, via the mainstream media outlets is just getting worse. And that's how you also know that things are not so pretty.
Yeah, it's difficult for people, including myself, to separate you see signs of the times, meaning like this distracting, ignoring of the truth, twisting of the truth into falsehoods and so on by mainstream media, that sort of thing. And you can see that as a sign of, we're nearing the end, because that's a sign of desperation. But it also seems to become the current modus operandi of the mainstream media. So does that mean, yes, we are in the late stage of an exhaustion stage of an empire and of a fiat currency system, et cetera, but does that immediately signal imminence of the end, or is that just possibly just signs of the last phase, and that phase could go on for a protracted period of time?
Well, look, I don't think we need to guess here. We know what to look at. I've been telling people, I think, since forever, and you know this, to watch the bond market. The global bond market is the driver of the world financial system. So by watching what's happening here with regard to global bond yields, we can really zero in on what's going on. When you see, for example, global bonds selling off here, okay, that's a problem. And if you see the bond yields acting erratically, going up and down and up and down and up, that's a sign of instability as well. So what central banks have been doing here is trying to give that illusion of stability in the debt market. They're on a mission to keep rates suppressed for as long as they possibly can. And they're going to buy more and more, just like I believe they're doing right now. It's in our face. Who else is buying all this debt? It's not me. It's not you. I guarantee you it's not one of the people who follows your work or my work. This is central banks. So they're going to continue that illusion until they can't anymore. And what's the side effect of what central banks are doing? Well, it's skyrocketing inflation here by issuing debt through one door, buying it back through another. This is massively inflationary. But people are not supposed to know these things. These are all part of the dark underbelly of the entire financial system, which has become my mission in life to expose. And I think between you and I, we're doing it. We're getting the message out there. People are paying attention. Thank goodness, honestly. But this is why I've been telling people for like many, many months, they're not done. They're not done. They're not done. I believe central banks are going to continue to inflate, and that is use their product, which is debt, which they issue to the world, okay, and buy assets with it. They want to own it all. They're on that mission to own it all. So they're going to sell the lie to people, oh, we're doing this or we're doing that. But meanwhile, look, we have an economy that's cratering around the world, as I said. People are suffering here. They can't make ends meet. Personal debt, household debt, consumer debt skyrocketing. The savings rate in the negative and going deeper into the negative here. This is a terrible environment for people. They're being pushed to the lower rung of society, as I explained on my blog what happened from a decade ago. The creation of a new feudal system here, a whole new paradigm, a whole new set of rules. And central banks collectively are going to continue to push their own agenda. They have their own best interest in mind, period. They don't give a damn about you or me or anyone who follows our work. They are right now in the middle of trying to foster this feudal system here, extreme haves, extreme have-nots, creating more people that are dependent on the system. That's really what's going on here. So how long could it go? I have no idea. But we have a clue by watching global bond yields, the relative strength of the dollar, or dollar demand, however you want to think about it in this environment, and then the MMRI, Mannarino Market Risk Indicator. Again, I think it's the best risk indicator out there. Period. The end. I don't even know of another one that exists. It's a little brainchild of mine I came up with sometime last year. It's a risk indicator that I think people need to start paying more attention to.
So that we don't miss the chance. If people want to find that, they go to traderschoice.net and they find it right there.
Right on top of the second page, you see it right there.
Okay, and that's a calculation. It's a number that goes up by in different ranges, green, yellow, orange, red, depending on market risk. But it's based on some of these key driving factors, these key indicators that you've been describing. So people can watch that and see a single indicator that helps them gauge the risk. People are concerned, though, that when you get to this risky system that we're at, and there's these interventions that have to keep happening, that the potential lockup or the potential failure of the system could happen without warning over the weekend or whatever. So In fact, we've already seen some, it's like before a volcano blows off, you see some early tremors, or you see some leaking of magma or whatever. In this case, we've seen the pivot by we've had the British bank have to back away from their quantitative measures and change their plans. We've had the so-called bankruptcy of the Royal Bank of Australia that had to get bailed out or basically refunded, recapitalized. We've had the Bank of Japan retreat from the line in the sand that they were trying to defend. So can you talk about these signposts along the way to this moment that we're expecting, but we don't know when it's going to happen?
Absolutely. Like, I love what you just said. This is exactly what we're seeing. The cracks in the system are getting worse. Okay, these cracks are going to have to be filled one way or the other, at least to keep this going until this whole thing eventually does end. And this whole thing eventually is going to end here. And again, I'm going to push this point home. Everyone is focused on the stock market. What's the stock market doing? What's the stock market? It's a distraction mechanism, because the stock market is a derivative of what's happening in the global debt markets. All of the world's global equity markets are 100% dependent on what's happening in the debt market. So when you got the mainstream media, why do people think, for example, you turn on CNBC, Bloomberg, Fox, they have you focused on the Dow Jones Industrial Average? It's always about the Dow. It's always about the Dow, 30 companies. They do not want people to look at the driver of the markets. The driver of the market is the debt market. Everything prices off or gain or achieves value from what's happening over there. So if people who know what they're looking at are focused on the debt market, we have a very good idea of where the stock market is going to go. Everyone's worried about the stock market crash, but it goes way, way, way beyond the stock market crash, because, again, a meltdown here in the debt market is inevitable. A spiking of rates is going to happen on an unprecedented scale here. It's like a rubber band being pulled back. It's going to eventually go off here, which is going to destroy the world equity markets. And then cash is, in my view, is just going to move, as it always does, from one set of assets into another. And that is going to be, in my view, commodities. I've been telling people to watch commodities. In fact, I put out a list of exchange-traded funds, commodity exchange-traded funds in my free newsletter, which you can also subscribe to. It's 100% free from my website, traderschoice.net. So again, understanding the driver here, realizing that we need to focus on the global bond market. We have the biggest tell in the world as to when this whole thing is actually going to end. And when we start to see, and we've seen this already several times, uncontrolled spikes in the 10-year yield, uncontrolled spiking in the global debt market, and then central banks all of a sudden some miracle happens, like it just happened today, where, bond yields are dropping. Well, who's buying? Do you know what it would take? Does anybody have an idea of the amount of cash it would take, an influx of cash into the global debt market to cause even the fraction of a dropping yield? So this is huge amounts of cash that's being flooded now to buy this debt, pushing yields lower. And that's who it is. This is central banks. They're not going to tell anyone, but who else is doing it? I mean, it's common sense.
You mentioned earlier about the distraction, the look here, don't look there, focus on the Dow, don't focus on the real drivers. You also mentioned that you foresee a shift of funds out of both bonds and stocks and into commodities. It echoes what's been discussed quite a bit recently about a split geopolitically of the East and the West, where the Western financial world, pretty much Europe and the United States and North America and Japan, are all in this, what you called earlier today, this all derivative, all based on nothing, financial system. So this financialization and derivatives upon derivatives upon derivatives in the West, whereas in the East, characterized by the BRICS plus nations, based on commodities. So even talking about that as the basis for their potential settlement currencies, that sort of thing, can you draw that implications to us? What does that mean to you when you talk about central banks? Because you haven't been distinguishing between East versus West when you've been saying that. When central banks are looking to try to be the buyers and lenders of last resort, what does that mean in a world where their mechanism of doing that, these fiat currencies, are doomed to collapse, whereas in the East, they're basing their financial they're pinning their financial hopes to commodities, to solid things. How does that play out in your view?
Well, it makes perfect sense, because that's what smart people should be doing here, putting their cash to work in real things. Understanding where we're going. There's no doubt in my mind that that scenario I've outlined with the debt market implosion, killing the stock market, and cash just moving into real things like commodities. I've been telling people that for 10 years at least. And that's the way it's gonna play out here. I also said in a recent video, in fact, I think it was the last one I did, 2022, was we're going to see much more dramatic currency devaluation as central banks continue to inflate. They're not going to stop. And what people are going to say, why do central banks want to continue to inflate? Well, the answer is very, very simple. The more debt a central bank can issue in the form of currency, these are units of debt, the stronger they become. People have no idea that's how it actually works. And this is why central banks have forced every quote unquote developed nation to become a slave to them. And they're more than happy to lend. Now, absolutely, I'm not shocked at all to hear about how the East wants to structure I guess, the investments and looking down the line, because you see they have a long-term game. Here, everyone's playing the short game, and it's coming apart. It's coming apart. It's coming apart very, very quickly. And I think in 2023, this is going to start to accelerate here. I'm not saying it's going to end here. I have no idea when it's going to end. I focus on the debt market every single day. The first thing I look at is, what is the debt market doing? What are bonds telling me? What is the debt market telling me things are going? Right now, again, as I said, we had this phenomenon of the rising bond yields as they were selling off. Now there's a rally today, a miraculous rally. Why? Well, it's central banks trying to stabilize the system. We're trying to give the illusion of stability. Without that mechanism, it's over. This whole thing will end in a nanosecond. And all this is going to get very real at one point. And the more that they continue to fuel the system this way, the worse it's going to be. And they know that too, and they're counting on it. They need the system to become extremely toxic. So when the bottom eventually falls out, this happens overnight, very, very, very quickly. Not a slow burn, a rapid shifting of where asset prices are going to go based off of action here in the debt market. It's just so obvious to me.
Can you talk to us for a moment about that very specific question about United States bank account risk versus safety in the face of the recent statements by the FDIC about, let's not inform the public, let's just inform the most major money managers about our ability to cover banking shortages, that sort of thing?
Well, insurance through the FDIC, first of all, is not guaranteed to anybody. They're going to say that would be completely insolvent as well. So if people are counting on the FDIC to make them whole, I think they have something else coming here. Absolutely. The whole system, based on fractional reserve, based on a multiplier, as a matter of fact, it's just, the whole system is just so fake. And people are going to get crushed. And I think that's the other worry, is what in the event of, and when it does occur, of a total meltdown in the debt market, is anybody's cash that's in these institutions, is it safe at all? I don't think so. Once it leaves, people don't understand this, all right, at its core. When that cash leaves your hand and ends up in a financial institution, it's theirs. It actually becomes theirs. It's not yours anymore. And then they lend it out on a multiplier, how it all works. So I don't think people understand it. It's not the system they're meant to believe exists. When you put your cash in one of these institutions, you lose a lot of your rights to it. And that would include, if in a full-on collapse of the system, you're just, well, frankly, screwed. People what did they used to do in the old days? Used to hold cash under the mattress, then it was still at least in your own hands. But when it gets transferred to another party, it's really not yours anymore. And they could do what they want. If that means a bail-in, well, they're going to do that. Though the people are going to be forced, as they always are, to bear the brunt of what's coming down the pike. Until that time, we sit back, we don't change our strategy. Everyone who follows my work, and I'm sure yours, is betting against the debt, becoming your own central bank, holding hard assets, for that eventual reset to this in the financial system, and then what they're going to do again. We're going to obviously the current system is going to implode, and a new system is going to be introduced. Obviously, people are going to they need an outcry very, very big. So they need people to become and have no alternative. In other words, let's see, going back to what we were talking about with regard to cash in these accounts. Okay, don't worry. Well, we're going to give you this instead. They're going to offer every solution you can think about. And it's already in the works here, absolutely. We're going to a completely digital cashless system. There's no doubt about that. And we're going to see. And I think we're going to see a lot of other things occur. More war, expansion of war, more cash to fund wars as well. I mean, all of this all plays together. And people are, fighting wars that we never even voted on, funding to the tunes of hundreds of billions. And I said right at the beginning, it's going to be in the trillions, which it will be. And this mechanism is going to be utilized by central banks to continue to inflate. Everything that you and I have been talking about for a long time is coming true. And if people were to look at some of our work from a while back, they would go, wow, how did they pull that out of the hat? Because it's just so easy, I think, to just look at the players, what's involved, what they're trying to achieve. And it just doesn't seem so far-fetched to me to understand where the most likely outcomes are going to be.
Just over the weekend, again, we heard an announcement about China has started allowing international flights to go, even though they're not allowing domestic travel within their country with lockdowns and a whole bunch of illnesses and deaths supposedly due to a new variant of an illness. It seems like we're replaying what happened 2.5 years ago.
Doesn't it? Doesn't it? Yes, it does.
So can you talk to us for a moment about, you talked about look here, don't look there, and you talked about look at the Dow. What about these never-ending series of crises? Because that's what you were just getting to, and I was hoping you would, about whether it's war, whether it's pestilence, whether it's whatever.
Well, that's what we have. It's a crisis-to-crisis mechanism, and that is it's being utilized. It's been weaponized. The entire system, every bit of it, is now completely weaponized, and it's about creating fear. Make people afraid of one thing, you can control their minds. And now it's just a miracle that this new variant here, 41% of new cases here, doubling every week, or suppose is what they say in this XBB.15. I think that's what it is. It's now taken over. And then, of course, there's all these, we need a new this and we need new pills, more cash to be thrown at that too. Yeah, it's another crisis. That's how we function. From crisis to crisis to crisis, more cash thrown at this, that, and the other thing. It's all part of the same mechanism, and people have no idea. They don't understand that's what's going on. They don't understand that that's how it has to work. Imagine if we had just one of our politicians come out and explain to people, hey, listen, I have a big secret to tell you. This is how the system works. And what that person would have, they'd have a bullet in their head. That's what happened. It's the truth. Yeah.
Greg, I promised people at the beginning of our interview that we'd let them know how to get a hold of you so that they could follow your blog, because you're very prolific, and your following has grown astronomically because of that, and the content and the perspective that you offer to people on a consistent basis. If people want to get plugged in, where do they go?
TradersChoice.net. Go right to my website, YouTube. You can find me anywhere. I mean, just Google me. You'll find me somewhere.
But specifically, if they do go to TradersChoice.net, they can sign up for free for your newsletter. What will they get with your newsletter?
Well, I get all kinds of stuff. I keep people a little more in the loop. Maybe things I couldn't put out on my video blog, I'll send out over there in my newsletter. It's 100% free. I don't share anybody's email address. It's just free. I want people to get this information, whatever I think is important, I put out there. Then on my website, there's a free chat room. Anybody who wants, it's really free. Everything's free. I want people to take advantage of this. The MMRI, which I think is the best risk indicator for this market that's ever been created, even though it's my little brainchild, it works. It helps me sleep at night too, believe it or not. I kept thinking, what can I do? There's got to be a way to measure risk here based on the credit market, based on the debt market. And I said, boom, boom, wow. And then I put it together and said, this is beautiful. It works. So I want people to take advantage of it. It's free. It's also free,
So the one thing I've noticed from subscribing to your blog is that I get an email in the morning and at the end of the day, and with links to your TradersChoice.net, where you have your latest videos. You give a video summary in the morning before the market, or just right after the market opens, and a summary right after the market closes, and one on the weekend about the markets ahead. So folks, don't miss the chance to take advantage of that. And if you don't want to miss a single interview with Greg or any of our guests, make sure you go to libertyandfinance.com. That's libertyandfinance.com. Put in your name, your email address, click submit, make sure you confirm, and then you'll get one email per day in your inbox with the latest interview with our guests as well as the weekly specials. Greg, I forgot to wish you a Happy New Year at the beginning, but I would like to ask you for your thoughts towards people on this beginning of a new year, new beginnings, and what you're thinking about, what's on your heart as far as new beginnings this year.
I want us all to come together. What do I leave people off with every Friday? Every freaking Friday. Love each other, care about each other, be charitable. I want people to adopt this so badly. That's why I say it, and not for my own health. If we all got together, we realized what they're trying to do to us, divide, conquer, make us hate each other for whatever reason they could come up with, we'd all be a lot better off. But unfortunately, there are so many people that are brainwashed and stuck into whatever trap that has been set for them. But if we just do those three things, love each other, care about each other, and be charitable, I guarantee you we could change the world. We could change the world.
We've been speaking with Gregory Mannarino, the founder of TradersChoice.net. Greg, as always, on behalf of all of our viewers, thank you for joining us on Liberty and Finance.
Thanks. Always great to be here.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.